U.S. retirees try to keep cool as stocks tumble. Perhaps some of you saw that article on the internet recently, just after Wall Street suffered its worst Christmas Eve collapse ever. More carnage could be in store for 2019, but is trying to keep cool really the only way to deal with it? Not if you have the right information and are willing to pick up the telephone. It's time once again to tune out the hype and focus on the facts. Yes, facts that matter to you, the income generation. Let's get started. Get ready to separate reality from myth.
With us, David Scranton.
David Scranton.
David Scranton.
David Scranton.
But David Scranton says, hey, not so fast.
How does it affect the markets? How does it affect the economy? Thanks to efficiencies in new technology and a staff of veteran analysts and portfolio managers, Sound Income Strategy strives to set new standards and bring institutional style investing to your portfolio. The U.S. stock market, as you might just know, just endured the worst December since the Great Depression, and its worst year since the financial crisis in 2008. And if the ongoing volatility gives way to our third major sustained market correction since the year 2000, the worst might just be yet to come. You know, I launched this show 3 years ago as part of a national movement to educate investors over the age of 50, primarily about two things. First, why it's so important to reduce your stock market risk in today's unprecedented age of economic uncertainty. And second, how investing for income allows you to do just that, while greatly increasing the odds of achieving your retirement goals. Since then, I've created new resources designed to reach more people and to make it easier for you to make that shift from risky growth-based investments to more secure investment-focused options. Today, I'm going to tell you all about one such resource, and that is the Retirement Income Store. We'll have several top national income specialists joining us to talk about it, and so much more. But first, let's talk about how the Retirement Income Store first came to be. The article I mentioned at the top of the show actually included a quote from a 75-year-old South Carolina retiree named Nancy Farrington. Based on the quote, I'd guess her retirement plan is built around the kind of typical buy and hold stock and mutual fund based financial strategies, those that are favored by most financial advisors. In the article, I mentioned that Farrington said, I have not looked at my numbers. I'm afraid to do it. We've been conditioned to stand pat and not panic. I sure hope my advisors are doing the same. You know, that quote struck me. Why? Because conditioned is exactly the right word to explain why so many investors at or near retirement age still remain stuck in what I consider to be outdated, risky financial strategies that at best raise their blood pressure and at worst deal a major blow to their retirement savings when the market suffers a sustained downturn. I'm talking about major drops like those we saw from 2000 to 2002 when the market dropped by almost 50%, and from 2007 to 2009 when it fell by nearly 60%. Now, when asked about the prospect of another such drop, Nancy Farrington rightly said, I have no way of riding it out if that happens. I can feel the anxiety in my stomach all the time. Well, Nancy Farrington is exactly the kind of viewer that I hope is watching our show today. Like many people, she already recognizes on a certain level that the reason she's enduring all this anxiety and standing pat through a period of record market volatility is that she's been conditioned to do so. We were all conditioned in the same way in the 80s and 90s. It was during the best long-term secular bull market this country's ever seen. And during that time, buy and hold investing in the stock market was a viable strategy. And advisors with Wall Street-based business models began to tout it as, quote, the only game in town for savvy investors. But that all changed in the year 2000 when the dot-com bubble burst and it ushered in our current, what I believe to be our current long-term secular bear market cycle. The trouble is, most advisors didn't want to bother changing their business models or admit to their clients that the game itself had changed. As a result, many Americans saw their retirement accounts devastated as they tried to wait out that first major correction. Then, just after the market returned to its previous peak and they were starting to recoup their losses, they saw their savings devastated once again when the financial crisis hit, ushering in that second major drop. So, if you're a regular viewer, you know that I've been on a mission since the late 1990s to teach investors from my own generation that there is another way, a way to save and invest for retirement that helps dramatically decrease all the fear and all the anxiety that comes with relying on the stock market as your primary strategy, especially during a long-term secular bear market like this one. Now, 2018 was a stark reminder for many of us of just how bad that anxiety can get, and a lot of evidence is pointing toward perhaps even a worse 2019. In the course of my mission, I've written 2 books, launched this show, and founded my registered investment advisory firm, Sound Income Strategies. I also founded a training academy for other elite financial advisors who specialize in the universe of non-stock market income-generating financial strategies. And as a result, the investing for income movement has gone national and is growing bigger and bigger every day amongst baby boomers. Now, part of that growth has been spurred by our very own Retirement Income Store, which is a virtual storefront on the Sound Income Strategies website where anyone could go to find an investing for income specialist in their area. Now, you might be wondering, just how easy is it to decondition yourself from risky growth-based financial strategies in order to make the switch to investing for income using an organization such as the Retirement Income Store? Well, we'll talk more about that a bit later in the show. But before that, we'll tell you about what makes us different from all the other guys, how our national income specialists are able to negotiate the best prices in town for our clients, and how they're relying on their own research to get the job done. Back with more right after the break.
Read David J. Scranton's groundbreaking new book, Return on Principle, 7 Core Values to Help Protect Your Money in Good Times and Bad. Discover practical solutions to the financial challenges facing today's generation of retirees and near retirees. David Scranton's approach to financial planning is a holistic system designed for maximum protection, strategic growth, and reliable income regardless of market conditions. Available now.
So now that you understand why making the switch to investing for income ahead of retirement is so incredibly critical, let's talk about the 5 things that set our income specialists apart from typical stock market-based advisors. Number 1, income specialists invest client money in individual bonds and bond-like instruments and typically avoid bond mutual funds. You see, when you buy an individual bond, you have a contract with a borrower that states that you'll get a fixed rate of interest for the life of the bond, and when the bond matures, you'll be guaranteed to get your principal back at maturity. But when you buy a bond mutual fund, neither such guarantee exists. In other words, bond mutual funds are riskier than a diversified portfolio of individual bonds. Number 2, income specialists look beyond the Moody's and Standard & Poor's ratings and conduct their own research. We learned during the financial crisis from 2007 to 2009 that all those AAA rated mortgage bonds that were about to default had ratings attached to them from these rating agencies that were overly generous. Our income specialists look beyond those ratings and research the actual financials and management of the issuers themselves. Number 3, income specialists use limit orders to purchase income-generating securities. Many financial advisors will simply buy these types of securities in the open market without the use of limit orders. The problem with not using limit orders and purchasing at current market prices is that investors could end up overpaying if the price of those income-generating securities are up on that day. Number 4, income specialists go directly to buyers and sellers to negotiate the best prices for our clients. Sound Income Strategies invest heavily in technology and research so that we can identify who's buying and who is selling various fixed income securities at any given time. This knowledge then gives us the ability to go directly to the buyer or seller and to negotiate a better price for you, almost, kind of, sort of on a wholesale basis for you, our client. Number 5, we actively manage our clients' portfolios of fixed income securities. You see, from 1981 to 2014, interest rates were generally decreasing, which meant that bonds essentially had a tailwind that pushed up their values. So that buy and hold in the bond market actually worked fine for that 33-year period. But in 2015, this downward trend reversed for the first time in that 33 years. Those tailwinds essentially turned into headwinds. And the best way to manage fixed income securities in a rising interest rate environment is to constantly strive to be in the highest yielding fixed income security in any given class. Our income specialists know this, so they proactively swap our clients' bonds to get higher and higher yields. Coming up after the break, we have Dee Carter and Michael Eastham, two of our own national income specialists who will be joining us to talk more about the retirement income store. We'll be right back here on The Income Generation.
Visit the Retirement Income Store at soundincomestrategies.com today to receive your free digital income kit. The digital income kit includes free reports, whiteboard animations, and an educational DVD, all packed with easy-to-understand information on how actively managed income-based investment strategies can help you achieve your retirement goals. Go to soundincomestrategies.com right now and click on the Income Kit tab to request your digital income kit absolutely free.
If you're not using someone who's well trained in fixed income and you're born before 1966, it may just be time for you to break up with that advisor and move on. I would suggest someone who will care for you through these important years of your life. If you need help finding someone, call or write us. I'd also like to remind you of the special report entitled The Income Generation. This is available free to you, our loyal viewers, online. If you haven't downloaded your report, pick it up after the show. If you're near or in retirement, head over to theincomegeneration.com and download your special report written specifically for the needs of the income generation. Again, those born before 1966. I'm David Scranton, and you've been watching The Income Generation.
Read David J. Scranton's groundbreaking new book, Return on Principle: 7 Core Values to Help Protect Your Money in Good Times and Bad. Discover practical solutions to the financial challenges facing today's generation of retirees and near retirees. Learn the truth about Wall Street, the financial media, and the secrets they try to hide from everyday investors. This isn't just another book about investing. Working Americans who have lived through 2 major stock market crashes and the worst financial crisis since the Great Depression in the past 16 years don't need another book about investing. David Scranton's approach to financial planning is a holistic system designed for maximum protection, strategic growth, and reliable income regardless of market conditions. Stop planning for retirement with your fingers crossed. Read Return on Principle: 7 Core Values to Help Protect Your Money in Good Times and Bad. Available now.
Now, as some of you know, I actually changed my own business model to specialize in income-based financial strategies before that first major stock market drop, which occurred from 2000 to 2002. Why? We see my own independent research told me not only that the drop was coming, but that it was the beginning of a new long-term secular bear market cycle, one that would likely produce at least 2 more drops in the next 15 to 25 years. Making a big change is always a little scary, and I wasn't quite sure what would happen once I became an income specialist. Of course, what ended up happening was that my business absolutely exploded in a positive way. As it turned out, a lot of people actually wanted to learn about investing for income, and not just because it was less risky than the stock market, but because it was a financial strategy designed to protect principal, but while also generating income. And that made sense to a lot of people. They'd just never been told that there was a viable alternative to the supposed only game in town, meaning the stock market, or for that matter, taught how it works. The reason, as I've explained before, is that most advisors like to use the words growth and return interchangeably. They ignore the fact that total return is actually a sum of both growth and income. Growth comes, of course, in the form of capital appreciation, while income is generated through things like interest and dividends. Again, many individuals became conditioned to investing for growth in the 80s and 90s because they were able to do it successfully. Starting in 1982, the stock market went 18 years with really only one correction from which it fairly quickly recovered. Therefore, you actually could meet your income needs by simply taking systematic withdrawals from your mutual funds, completely confident that it will be replenished with capital gains the following year. But if you're doing that after the year 2000, meaning that you are focusing on growth and trying to meet your income needs by taking withdrawals from your mutual funds, in those later years, you were basically cannibalizing those accounts. And that hasn't changed since the turn of the century, which is why the investing for income movement continues to grow faster and more widely than ever before, thanks in part to the Retirement Income Store. As I mentioned, the Retirement Income Store is a virtual storefront on the Sound Income Strategies website where you can go to find an advisor in your area who, like me, specializes in actively managed income-based financial strategies. These are trained financial advisors who are registered with Sound Income Strategies, who specialize in conservative non-stock market options designed to protect your principal from market volatility and spend down, also designed to generate income through interest and dividend at a competitive rate, and to enable you to grow your portfolio organically through strategic reinvestment. More than anything, these income specialists emphasize investor education. They work with you to help you calculate and determine your retirement income needs based on your individual goals, and to teach you how to avoid costly mistakes and oversights that could jeopardize those goals. So, just how did these advisors come to specialize in the universe of income-generating strategies? Well, you're going to be meeting some of them on today's show and hearing their stories directly from them. But the fact is that many have made the switch to conservative income-based strategies in the wake of that first or perhaps even the second major market correction since the turn of the century, once they understood that a new long-term secular bear market had taken hold. I actually began seeking out fellow visionary advisors even before the second drop had occurred. In 2006, I launched a training and coaching academy aimed at teaching those advisors my own approach to income strategies and investor education. Those who were receptive and willing to make some changes saw incredible results similar to mine. Great response and incredible success. Their ranks have steadily grown ever since 2006, even as the majority of advisors continue to keep their heads buried in the sand and their clients stuck in outdated strategies built around stocks and stock mutual funds. Now, fortunately, an increasing number of baby boom investors have pulled their own heads out of the sand. They've actively begun searching for advisors who understand the game and understand that portfolio protection and income are the right priorities for retirees and people approaching retirement, especially in today's unprecedented new age of economic uncertainty. Now, the Retirement Income Store has made that search easier than ever before. Now it's time to welcome in two of our national income specialists. Joining us now, we have retirement planning expert Michael Eastham, the founder of Fellowship Financial Group in Altamont Springs, Florida. Michael has 25 years of professional experience under his belt, and he's also the author of the best-selling book, Common Sense Income Strategies. We also have with us Dee Carter. He's the president of the Carter Financial Group in Midland, Texas. He hosts a popular radio show, and he has more than 45 years of experience at helping bring stability and peace of mind to his retirement planning clients. Dee, Michael, thanks for joining us today.
Hey, it's good to be with you again, Dave. Thanks a lot.
So, Michael, first to you, tell us, why do you hear advisors, uninformed financial advisors today, constantly say, gosh, all you can get in the world of bonds and bond-like instruments is maybe 2 or 3% if you're lucky?
Well, I think a lot of it has to do with our training. We're all kind of brought up through the same educational process, even in the financial planning world. And it takes an intentional aspect of personal growth to want to delve into the world of income. And the reality is, when you understand all of the universe of income-generating investments, that's just not true.
Yeah, it's not true. And of course, Dee, we just talked in our last block about the 5 differentiating factors that make how the retirement income store manages money different from how most do. But I'd like to ask you about, as an advisor with 45 years of experience, why is it that you've actually told me and Michael that this is being part of the retirement income store is really the most exciting time in your career?
My career, as you said, spanned 45 years, and this is probably one of the most exciting things that I've seen come down the pike in a long time, basically because people don't understand the value of investing for income. We've always been taught growth is the thing. The truth of the matter is, as Michael just pointed out, there are a world of investment opportunities out there that are better for the client that don't have the risk that the growth side does. So I'm thrilled to death with it. I think it's something I've been looking for a long time.
Now, it's interesting, Michael, you work with a lot of people from the Northeast that get near retirement and they transplant themselves down to Florida. People who, maybe some people that are near Wall Street, for example, that have really ingested that stock market model. They drank that stock market loving Kool-Aid. How do they make that paradigm shift emotionally from going from the G to the I when it comes to their investments?
I think one of the things it has to do with is the realization that their paycheck is stopping. And it's a sober reality when you realize, hey, now all of the money that I've accumulated over the last 30 to 40 years in my career, I need to turn that into an income generator for me. It's got to last me for the next 30 years or so. So that's a critical thing. So I think it's a sobering reality and an understanding that that I've got to make a change in my strategy, and I'm not sure how to do it.
So in other words, basically financial self-preservation takes precedent over the strong dose of Wall Street Kool-Aid that they may have had forced down their throats, so to speak. Dee, most of our clients, my clients, Michael's clients, your clients, are all somewhere around my age or your age or somewhere in between in that gap. So tell me demographically why you think this is the right time for the retirement income store's launch.
The fastest age group growing in this country today are people over the age 65. We have 10,000 people a day turning age 65 in this country. I had a client came in today who was 66 years old and had lost $17,000 in the market in the last 2 weeks. He understands income now instead of growth. And that's the main reason, is because we're an aging population and people are starting to see the value of income as opposed to the risk in growth.
Yeah, and of course people don't have the pension plans that they used to be able to count on when our parents were retiring. And people are smart enough to know these days you can't really count on Social Security. So I agree 100%. We need to leave it there for this block, gentlemen. We'll be right back with another segment. And you stay with us too. You're here with Michael Eastham, Dee Carter, and David Scranton, all on the income generation. We'll be right back. Now, as many of our regular viewers know, much of what we do on the show to help viewers achieve safe passage into retirement is based on making the shift from investing for growth to investing for income. Before we go any further, I would like to give you an example that clarifies why making the shift to investing for income can make all the difference in the world in your quality of life during retirement. As I mentioned before, total return is the sum of both growth plus income. The problem with investing for the G, the growth, is that the G can easily turn into an L and leave investors scrambling to cover expenses during retirement. On the other hand, income investing comes from sources like interest and dividends and can be much more predictable, especially when you're investing by contract, as is the case with most of fixed income investing. So let's say that you've determined you'll need a total income from your portfolio, a total return, if you will, of $50,000 per year to cover expenses during retirement without dipping in the principal. Now let's say your investments generate $30,000 per year of income, of interest and dividends each year. That means that you would need to generate $20,000 per year each and every year from the growth component of your portfolio. Well, think about what would happen if the stock market experienced a major correction right before you planned on retiring, or during your early years of retirement, and you were no longer able to generate that $20,000 from your growth component of the portfolio? What if the G turned into an L, followed by a few more years of losses? The question becomes, would you be willing to make changes to your current lifestyle and just live on less? Or would you tap into your principal balance of your retirement savings, knowing what a slippery slope that it might be, especially if you're in your earlier years of retirement? Or would you prefer to go back to work if you had to? For anyone close to retirement age or already retired, none of these options sounds very appealing. And that's exactly why the team of income specialists at Sound Income Strategies is so incredibly committed to helping those who are close to retirement age make the switch from focusing on growth to focusing on generating income or retirement. Why? So that you can avoid having to decide from these three unpleasant options that we just covered. Now let's bring back in two of our national income specialists, Dee Carter and Michael Eastham. Gentlemen, thanks for sticking around. Now, Mike, I asked Dee about demographically why he's so excited about really the timing of the retirement income store, but you had told me you're excited for economic reasons. Why is that, Michael?
Well, I think some of it has to do with, again, the shift in mindset of people as they approach retirement. For so many years, they were into the growth strategy, accumulating assets, but they realized it's time to make a shift. And they also realized that, when I was 30 or 40 years old, then I could stomach a major downturn in the market. I had my income, my salary to back me up and to get me through that trough in the market, so to speak. Now they're not so fortunate. They realize that on top of Social Security, they're going to have a gap in their income need because they don't have a pension. And crossing your fingers and toes, like you mentioned earlier, and hoping the market cooperates for the next 30 years is just not a realistic way to look at it. So you've got to have a little bit more of a predictable income source. And that's what the retirement income store does. And that's one of the reasons why I think a lot of folks are real excited about it, including myself.
So Dee, to you, economically, gosh, we have a headwind with fixed income. Interest rates are going up. The stock market has been doing really well. Didn't have such a great year last year, but doing well up until the last quarter. Some people would say this is the worst time to talk about something like the retirement income store. But you and Michael said economically, financially speaking, it's the best time. In your own words, why is that?
I don't think there's any question about it's the best time. In fact, people only remember what happened to their stock market situation yesterday. It's not like they're looking back over the last 5 or 6 years. They're looking back over the last 2 or 3 months, and they're seeing what's going on. And the older they get, the more they realize, as Michael just well pointed out, we are really not ready to lose the kind of money that we've got in the stock market when we know we're going to have a source of income for the rest of our life. So this is the perfect time for the retirement income store to take off and take flight. I'm excited about the opportunity, and so are my clients that I've talked to about it already.
So Michael, we talk about investing, and I've heard you use this term before, how investing for income is like investing by contract with a lot of the income-based things. Why is investing by contract so important for your clients that are retired or approaching retirement?
Well, that's a great question. The fact of the matter is, investing by contract means that you've got a fixed, predictable income stream coming in. And you can rely on that whether the market value is up or the market value is down. It's kind of like having a great tenant in a rental property. You don't care whether the market value of your rental property is $180,000, $160,000, or somewhere in between. If your tenant's paying you $1,000 a month, you know your bills are going to get taken care of, and you know you're going to eat. That's exactly why.
And Dee, last part to you in 20 seconds or so. Tell us, with 45 years of wisdom, what's the final message you'd like to see our income generation viewers really absorb today from what you have to say?
Try to remember that the formula, total return equals growth plus income. And when that G, that growth, turns into one of these, you're in really, really big trouble. Take a look at the retirement income store because of the very things that Michael just mentioned.
Dee, Michael, thanks so much for joining us today. It's been our pleasure as usual.
Great to be here.
Now it's time to welcome in two more national income specialists. Joining us now, we have Matthew Johnson and Jeff Small. Matthew is the owner and president of Johnson Wealth and Income Management in Humboldt, Iowa. He's been a financial advisor for more than 15 years, and his company has been around for more than 50 years. Jeff Small is the president of Arbor Financial Group in Melbourne, Florida. He has 32 years of experience in financial services and also is a best-selling author of the book, Turning Financial Planning Right Side Up. Welcome to the show, gentlemen.
Thank you, David.
Thank you, Dave.
So, Jeff, first to you. You know, you've told me on many occasions that being part of the retirement income store means a lot to you and your clients. As well as I think I've heard you say at one point, that's probably the most exciting thing that you've done in 32 years in the business. Why is that?
Well, the retirement income store, it really is revolutionary in terms of how it's going to change the culture and expose consumers to a different methodology of investing other than being accumulation centered, or every financial advisory firm, every broker dealer, every investment advisory firm from Fidelity to Wells Fargo basically is accumulation centered. And so to offer consumers a new approach that's not market centered is very exciting.
Now, Matthew, I know that you're big into education in your community in Iowa. So why is the retirement income store so exciting to you? And I guess, why is it really exciting for your clients who get to meet you and learn about it?
Oh, it's very exciting to me. You know, the practical question is this: there's a lot of investors that, you know, they're focusing on ratios, they're focusing on good entry points with their stocks and mutual funds and that sort of thing. But the question I ask most of my clients is, when is the last time that their money actually worked for them? You know, we pay everybody with the money that we earn, but when's the last time our money actually worked for us? And so when you switch from performance to purpose, when you actually start focusing on investing for income, it's just miraculous, the turn, the shift, the transition that you see people make, because now the money that they're investing is actually working for them. It's not speculating, it's creating tangible income.
Right, it's not just paper gains and paper losses, it's real money. And while we got you here, Matthew, 30 seconds are left in this segment. Tell us economically why you think that this is the optimal time for the retirement income store launch.
So we have 80 million people retiring over the course of the next 20 years, let's say. These people have accumulated money, but they understand that once the paycheck stops, they're going to need income to spend or income to save. And the retirement income store is the best thing that's come along in a very long time, because it allows them an alternative to the ridiculous nature of, you know, risk versus reward. Let's spend our principal in order to get income.
Right. Matthew, we need to leave it there for now in this block. Gentlemen, please stick around. We'll be back with more. And you stay with us too. We'll be back with more from Matthew Johnson, Jeff Small, and David Scranton here on The Income Generation. Those financial advisors nationwide who are part of the retirement income store are only one aspect of what makes the store unique. Behind the scenes, there are account managers and other trained professionals who specialize in the active management of individual fixed income portfolios. Of course, our specialty at Sound Income Strategies. But what exactly is active management? Well, as I pointed out on previous shows, just as stock prices and other economic factors never move consistently in one direction or another, neither do interest rates or bond prices or bond values. They constantly experience ups and downs within broader directional changes, which generally unfold over decades. It is exactly these fluctuations that make it possible for income-based strategies, built primarily around individual bonds and bond-like instruments, to remain viable and even competitive in an environment of overall rising interest rates. That means competitive in terms of total return, which again is a sum of both growth plus income, but with far less volatility and far less risk. A specialist in the active management of individual bonds and bond-like instruments can continually take advantage of those market fluctuations to upgrade clients' portfolios for higher yields and capital gain opportunities. The result is often increased retirement income with reduced risk. That's income that you can spend, or if you don't need it, work with your advisor to invest it in other income-generating strategies to grow your portfolio organically, or as I like to call it, growing it the old-fashioned way. Currently, the Retirement Income Store has over 20 advisors covering more than 20 states, with more coming on board each and every month. These income specialists are registered with Sound Income Strategies and therefore have full access to all of our management resources and expertise. What every Investing for Income specialist understands and teaches is this simple fact, that everyone wants basically the same thing from their investments, and that is maximum return with minimum risk. But what they also understand is that not everyone takes the time to ask the question, maximum return for what eventual purpose? Is it for a lump sum purchase like a boat or a second home? Is it for an inheritance? Or is it for reliable income, present or future, to meet retirement income needs and goals? The answer for the vast majority of baby boomers is income. And once they realize this, they start to understand the common sense in using strategies that prioritize income instead of growth. Once they've made that mental shift, they also quickly realize those same strategies are designed not only to generate the income they need, but to achieve two other crucial goals: to protect their principal, and again, to create the opportunity for continued portfolio growth through strategic reinvestment. But once again, these are actual strategies requiring specialized training. For the vast majority of people, they're not do-it-yourself type options. Ideally, you want to work with a qualified advisor who specializes in these strategies. And now finding that advisor has just become easier than ever before, thanks to the Retirement Income Store. Now it's time to bring back two of our national income specialists, Jeff Small and Matthew Johnson. Gentlemen, thanks for sticking around.
Yeah.
So Jeff, economically, you're a student of the markets. You're on Fox Business News. It seems like every other day. It feels like that at least, and sometimes CNBC and other outlets. Economically, is this a good time or a bad time to be launching the Retirement Income Store?
Well, I think it's a perfect time, actually, because of where the markets are. We see massive capitulation in the markets and very weak technical data. The demand for stocks is wavering. And now is the time for people to really circle the wagons that are pre-retired or retired and say, how do I create income? And reach out to folks that are partners in the Retirement Income Store so we can show them a different way to create income and avoid market losses.
So Matthew, why do you think that, if this is so obvious to all of us, why do you think then that your average advisor will say, well, if you're going to be in fixed income bonds and bond-like instruments, the best you could hope to make these days is maybe 2%, maybe 3%. Why is that?
Well, I think that is all based upon their business model. If you are working for a normal, brokerage outfit, what are you selling? If you're a stockbroker, you're selling stocks. That's why we call them stockbrokers. And so that's their universe. The world of fixed income is very specialized. It's very different. It's very mathematical. There's a lot of research and due diligence and fiduciary responsibility that goes into that.
Okay.
That's the reason that we're so special.
So Jeff, financial advisors are supposed to be analytical and mathematical by nature. So why is it 30 seconds, why is it they have such a tough time making this transition, in your opinion?
Well, they never really look at the math because they're trained to develop transactional relationships so they can place investments to do what? Get paid. And so they put their own needs, usually the industry does, ahead of their own. And that's true of even the discount brokerage firms like TD and Vanguard and Ameritrade.
Interesting. Well, some of it's, I think some of it's that, and I think some of it is just human nature, guys, right? People tend to do the same thing over and over again. Hey, stay with us, gentlemen. I have a very important question for you when we come back. So stay with us. You stay with us, too. We'll be back with more from Matthew Johnson, Jeff Small. I'm David Scranton, and you're watching The Income Generation. Now, regular viewers of the show may have heard me say that in life, our earliest paradigms are often what shape our future experiences. And when it comes to planning and saving for retirement, this certainly rings true. For example, many in their 30s and 40s have a healthy respect for the potential dangers of investing in the stock market. Why? Because their earliest experiences with investing involved the bursting of the technology bubble, followed by the bursting of the housing market. On the other hand, many baby boomers first got serious about investing during the 80s and 90s, what was the best stock market in U.S. history. And during that time, investors saw the Dow Jones Industrial Average shoot up from 700 points to 11,000 points by the end of the 1990s. And as a result, many investors became dangerously addicted to stock market investing, and their financial paradigm had been formed. In my new book, The Retirement Income Story, I explain how there's a safer and much more effective way for everyday investors to achieve the retirement they've always envisioned, and that is investing for income. The book demystifies common investment myths and describes how making the paradigm shift to the income model before you retire could make all the difference in the world in the quality of your life during retirement. My book explains why investing in mutual funds could place your retirement savings at risk. It also describes how the income specialists at the Retirement Income Store can help you protect your savings from stock market volatility, and how to establish ongoing streams of income that you can count on well into retirement. And now it's time to bring back for one final minute our final two guests, Matthew Johnson and Jeff Small. Three of us, we have over 100 years of real-world experience here. Tell us, 30 seconds or less for each of you, what do you want our income generation viewers to know about the Retirement Income Store? Matthew?
The Retirement Income Store allows them an alternative to all of the craziness that they've been embedded in ever since they've been really investing for retirement. And it allows them to be able to sleep peaceably at night knowing that their money is working for them, so they don't have to spend their principal. Rather, they can live off from the principal using the interest and the dividends that their money is creating.
Jeff, same question to you. What is really your final words that you'd like our viewers to know?
I think the viewership should really know that the Retirement Income Store is going to show folks how to create income. And if you Google income, fixed income that is, it's income that doesn't change. And the Retirement Income Store specializes in the universe of income generating options that maybe most consumers have never really been exposed to, that can learn about and educate themselves to take advantage of.
I love you guys, and I thank you, and I appreciate everything you do for helping me carry the income flag over the finish line in the years to come. And stay with us. We'll be right back with more here on The Income Generation. I'm David Scranton. If you're near or in retirement, head over to theincomegeneration.com and download your special report written specifically for the needs of the income generation. Again, those born before 1966. I'm David Scranton, and you've been watching The Income Generation. I'd like to thank all of our guests for joining us for another episode of The Income Generation. I'd also like to thank you, our new and returning viewers. Coming off a year of record stock market volatility, no one knows for sure what 2019 has in store for us. But if you watched our market forecast show last month, you know that my own forecast for the year ahead calls for another negative year on Wall Street. It may or may not be the long overdue third major market drop of our current secular bear market cycle, but either way, I do believe the stock market will end 2019 lower than it began the year. Is your only choice to try to keep cool and not panic? Is your only choice to hang in there and hope this isn't the next major sustained downturn, a drop that history says could be anywhere between 40 and 70%? So is crossing your fingers and toes and hoping you avoid a major loss really your only option? Or do you have a better option? Well, hopefully you've learned from today's show that you do have another option. And learning more about it now is just as easy as visiting a website and picking up a telephone. Why? Because a growing number of financial professionals across the country are on a mission to educate today's generation of retirees and near retirees that the best way to reduce fear and increase your odds of achieving your retirement goals is to make that all-important shift. That means a shift from outdated financial strategies focused on growth and capital appreciation to real strategies focused on portfolio protection and reliable lifelong income. To learn more, visit the Retirement Income Store on the Sound Income Strategies website. Simply click on the Sound Income Marketplace icon, and you'll instantly have access to a map of the United States that identifies an investing for income specialist in your area. It really is just that simple. So, Happy New Year, and thanks for watching. If you're close to retirement and you really want to know how to protect and maximize your money, it's absolutely essential that you stay informed and up to date. And as you know, right here is where you can do it on the Income Generation. Thanks, and we look forward to seeing you next week.
David J. Scranton, Amazon bestselling author, money manager, and national TV host, is on a mission to educate baby boomers about the need to shift from growth to income. If you're at or near retirement, focusing on income over growth can make all the difference in the quality of your retirement. Each week, David educates America on his Newsmax TV show, The Income Generation, where he provides special reports and more to teach baby boomers about the income model. Call now for a free copy of David's latest book. Go to soundincomestrategies.com/income to find out more.